Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim, the Currency Professor, and today is August 30th, last day of the month for 2013. We had some pretty good movement this week, and a lot of information came out, so we'll run through everything here real quick. On the economic side today, German retail sales both reported on the month-over-month and year-over-year basis. The month-over-month was actually down 1.4%. Expectations were for an increase of 0.5%. And on the year-over-year, they were up 2.3%, and expectations were for a 2% rise. So kind of a mixed bag there for retail sales, depending on which side you believe. But just a mixed bag, so kind of confusing for the outlook for Germany. Overall, Europe consumer confidence down 16, a little bit better than the down 17 that was expected, and a little bit better than last month's down 17.4. Also, Europe's unemployment rate 12.1%, same as last month, and in line with what we've seen for the last 7 months now. And that is probably a good thing because it is stabilizing then. It's not getting any worse. So for the last 7 months we've been at 12.1%, and for quite a while there, every month it was ticking up. So that is a positive sign. In India, a lot of turmoil there. The rupee losing a lot of value. So today their GDP was reported at 4.4%. That's a little bit less than the 4.7 that was expected, and a little bit less than last 4.8%. So probably starting to affect the production there, and we will probably see it as the months go on here. That fall in the rupee is going to certainly affect their production in India. It can have repercussions throughout the world, just as it did in 98, 99 with Thailand, Brazil. So we are watching that carefully for any signs that it could blow up and expand. In the U.S., personal income, personal spending, both up 0.1%. Kind of a lackluster report there. We're expecting up to 0.2 to 0.3%, and last month was up 0.3, 0.6. So a little bit of disappointment there. And then on the Michigan consumer sentiment number, 82.1, better than the expectations and better than first reported at 80.0 2 weeks ago. So overall, still pretty decent number there. It was not as good as we've seen lately around the 85 mark, but still, in comparison to where we've been over the last 5 years, really not a bad number at all. Tomorrow morning, Saturday morning, in Japan, manufacturing PMI is reported and industrial production. So those are going to be watched. There's a whole slew of other reports coming out as well tomorrow out of Japan. So that's going to affect Monday's opening Sunday night in the U.S. For the Japanese yen, and we will certainly see if there's any big changes there. We'll see a gap then in all the yen numbers. On to next week. We have some economic reports on Monday. The markets will be closed in the U.S. and Canada. So the Europe session will be probably the main session other than Asia. And in Europe, we got a bunch of purchasing managers reports coming out, starting in China and then moving into Europe. And all of them are expected to be above 50. So this is the first time we're starting to see this. So expectations are increasing. The numbers themselves are starting to increase. So we'll see how they come out. That's actually a good sign. Tuesday, starting off in Australia, retail sales and the current account. Current account will be closely watched. Also, the Royal Bank of Australia meets, so everyone will be looking to see what they do in light of the recent slowness there. And then in the U.S. on Tuesday, you got the ISM manufacturing PMI. Expectations are for 54.2. Last month was 55.4. So we'll see how that comes out. Also, construction spending in the U.S. expectations for an increase of 0.3% as opposed to last month's negative 0.6. Then on Wednesday, Australia reports their GDP. Expectations are for a 0.6 increase. Again, the Royal Bank of Australia on Monday will take precedence over that. Then on Wednesday in Europe, we get the revised GDP. 0.3 is what is expected. That's what was reported first, so we'll see what happens if there's any surprises there. Canada reports their trade balance. That should affect the currency a little bit, as well does the U.S. Both report at the same time, 8:30 New York time. Expectations are for the Canadian one to be slightly better, and for the U.S. one to be slightly worse than last month. Also in Canada, the Bank of Canada meets and decides interest rates. In the U.S., total vehicle sales. This has been a closely watched number because this gives a real good indication as to consumer sentiment and what the consumer is doing out there. And we've been hitting around the 15.5 area to 16 million units per month, or I'm sorry, per year. So we'll see what that comes out at. Expectations are for 15.8. Also on Wednesday, is the beige book, Fed beige book. So everyone will look for that for an indication as to what the Fed will do next. On Thursday is the meetings for the Bank of England as well as the European Central Bank. So that will take center stage in the European session. Then in the U.S., ADP non-farm employment change, kind of a precursor to the U.S. report on Friday. So ADP is expecting 181,000 new jobs, and last month was 200,000. Also in the U.S. ISM non-manufacturing PMI, a little bit lower than last month expectations, 55.2 as opposed to the 56. And also factory orders in the U.S. expected to decline 3.2%. Fairly volatile number, so we'll see how it comes out. Last month was up 1.5. Then on Friday in the UK, manufacturing production and industrial production, both very closely watched numbers. Last month, though both of these were up quite a bit last month. Manufacturing was up 1.9 and industrial up 1.1. Expectations are for 0.4 this month and 0.2. So we'll see how those actually come out. We'll see if those numbers from last month were real or not. If we come out negative this month, then it kind of negates some of that increase that we saw last month. Also in Europe is German industrial production, and expectations are for a negative 0.3% increase. So we'll see how that comes out as well. That's coming off of a 2.4% increase from last month. And then in the U.S. is the big kahuna, the non-farm payroll and unemployment rate for August. This will be a pretty big deal, and everyone will be watching these numbers as well. So 181,000 also expected, just like the ADP number for non-farm payrolls, and unemployment rate at 7.4%. So we'll see how that comes out. Okay, let's run on to the technicals here. Right now, the Euro-US dollar down about 34 pips. We've been down the last 3 days in a row. Looks like we're probably going to bottom right here, at least for a little pop-up. We'll see how Monday is, but it looks like Monday may pop just slightly. And otherwise, though, generally weaker as we look at the weeklies. This week pulling back. Looks like we'll probably start another correction like we had back here, maybe even running down to that 127.50 area. On the monthlies, we're ending up the month negative, and this is looking a little bit like a little hammer there. So that's a possibility that we could be headed lower here in the coming months. On the pound dollar, down again today. This is now the 7th out of the last 8 sessions down. We're only down about 12 pips, but nonetheless it is still negative. We're really only down about 200 pips off of the highs, which is very, very small for the pound. We can easily see that one day. So the fact that we got this angle coming out here, it's a very broad angle, and that we've only fallen off 200 pips means that we'll probably turn around and move up quite a bit from here. We can see that if we draw a line up here, we're pretty much right on it right now, so we should see a turnaround here probably next week. And if we look on the weeklies, we can see how we've pulled back 2 weeks very nicely. So we should get 1 week then where we spike up to these old highs and try to exceed them. If we cannot exceed them, then we'll fall off again. If we do exceed them, well, then we'll probably run up to this trend line, which is up around 159. Now on the monthlies, that still puts us up right up in here around 159, and we're still within that downward pressure. So even though we're consolidating for these last few months, it's still downward pressure, and it would take us really to close all the way up above this level, which is about the 170 level, in order to actually turn this market around from this huge sell-off back here. So very unlikely that's going to happen right now. We need to go down and test the 140 area first. U.S. dollar against the Swiss franc, down slightly today, down about 3 pips right now. Been all over. Nice 2 days, Wednesday and Thursday this week, and really starting to build quite a bit of a base here. If we were to draw this kind of a thing, it's probably going to move and make this kind of a pattern where we build this very, very strong base over several weeks period of time. If we look at the weeklies, we'll probably see it a little better here. We can see how it's actually building kind of a nice curvature here, and that should go on for a couple more weeks, and then we'll start to move up again. And probably in the next move will be the point at which we bust out of here and get above these multi-decade trend lines to about the 103 area, at which point then we will have confirmed that this market has indeed turned around longer term, and then we will see much more movement to the upside by the dollar. U.S. dollar against the Japanese yen, down 21 pips today, still hanging out above 98. We are slowly getting into this peak of a point here at which we'll probably burst out to the upside. It's a consolidating correction here that we're seeing with a little bit of a downward bias. So we are in the same range that we were at back in April. So again, this is probably nothing more than a correction. We can see that here on the weeklies a little clearer. We're staying within these triangular lines, and it really looks like it will probably bounce around here for a few more weeks, and then ratchet up out of here to go and make new highs. And on the monthlies, we can see it a little clearer. On the month now, we are closing out the month slightly positive. We'll see how we actually close today out, but nonetheless, it would be the ending to a nice 3-period correction here. Euro Swiss down today, down about 32 pips, back under 123, but really starting to build a pretty good base, very much like we're seeing in the dollar Swiss. So it looks very, very good here longer term. If we jump out to the weeklies, and let me scrunch them up a little bit here, we can see how it's really almost flatlining here in this same area for quite a while. The weekly range is getting smaller and smaller. So very, very good indication that we're going to turn around just like we did back in this area. So we should see a spike up here probably in the coming weeks, sometime in the next 2 to 3 weeks. Euro yen down today, down 52 pips right now, back down under 130, 129.60 area, and really nothing more than consolidating again to the sideways channel with a little bit of a downward bias, just like the dollar yen. And again, same areas we were at back in the beginning of April. So that consolidating, though, is coming more and more to a peak. We can see that here as it does this kind of a declining type of triangle with an upward momentum to it. So on the weeklies, we can see that a little clearer here. We got this line right across the top, and then this angle coming up. So that should mean that we will move to the upside once we come to a peak in there. On the monthlies, we're consolidating actually straight across, unlike the dollar yen, where we're consolidating with a little bit of a downward bias. So this could come with a little bit more of an upward swing very quickly. We're seeing that each monthly range now is getting smaller and smaller, so that's an indication that we could have one pop up here. And this pop up on this market, we could jump up 1 month and come right back down. So that is the risk in here, whereas the dollar yen could keep going. U.S. dollar against Canadian, having a little bit of a mixed day today, down 3 pips right now. Really looking like we're probably going to turn around up here if we close like this today. We ran up yesterday quite nicely, came up today, tested the highs, and we're failing to meet new highs. So that's a negative sign. On the weeklies, we're still positive on the week. So on whatever we have on the dailies may be short-lived, and we could bounce right back here. If we look at the weeklies, we could just continue on higher next week. If we jump out to the monthlies, we can see we've talked about this so many times. Building this momentum here really looks really good as we're coming off kind of a flat area and then just building that curvature of momentum. So at some point here we're going to see ourselves jumping up 110, 112 very, very easily. U.S. dollar against the Australian dollar, Australia against the U.S., however we want to call it, down about 26 right now, hanging out around 89. Really looking like we're probably had a correction here, and because of the angle of this, it's much slower, and we have failed to break this this bottom area so far. We need a close below that level, especially on the dailies and the weeklies. So we're not doing it this week, and we're not doing it on a monthly basis. So that may be turning out to be a positive thing. We may spike right back up. We would need, though, to see a close back up here above this 93.50 area to really turn this market around. And if we jump out to the monthlies, we can see that looks pretty tough to do at this point. We've tried it now the last couple of months and it failed. So we're going to end up this month negative, and really looking like it'll probably continue to sell off on the monthlies here, getting down to that lower 80 area that we have looked at for so long there. Alright, went way over my time limit today. A lot to talk about, a lot going on this week, this past week and next week. So have good trading. If you're not a member of FX Addicts, please stop on by. I am around by email, tim@fxaddicts.com, or you can join for 7 days free. Please do so if you haven't already. Thank you.